What questions do you recommend investors ask lenders when inquiring about STR loans specifically?
If you're inquiring about an STR loan, specifically like a DSCR loan, ask them how they determine the rental income on the subject property. Do they determine it through a data tool like Rabu and use that? Do they determine the rental income from the subject property with a 1007, which is an independent third-party rental survey? And how and what type of haircuts are they giving that income, right? Some people will give it a 25% haircut, only using 75% of it, and go that approach. Now, one thing I actually failed to mention as far as methods for determining the rental income on the subject property, if outside of the Rabu data, we do have the ability to look at the actual income data. So if in fact the subject property being purchased is a rental property and we can get 12 months history on what that rental income is on a ledger from either a hosting platform or a property management company, we can use that income to qualify the new buyer on that subject property.
That's a great point. And for that type of asset, do you take any cut off of that like you do with the projection data, or do you actually use the full revenue generated?
In that situation, because we're getting a ledger with the full history, you're going to see the net operating income, and that's what would be used. Because typically in a ledger from a property management company or a hosting platform, you're going to see the fees off of the gross. And so, in that case, on that type of ledger, it's usually there in that, and therefore we use the gross minus the actual ledger deductions.
Makes sense. Good stuff. Yeah, never hurts to have historical data. For sure, when it comes to trying to acquire a loan. Next question, and we've had a few come in related to this. Obviously, in this real estate environment, there are some opportunities to be creative and have some cost-saving opportunities that you can deploy to save money during acquisition. I've had a couple of people ask about how seller credits exactly work, but what are some of those cost-saving opportunities there in the current market? Seller credit being one of them. What else is there?
So there's a seller credit we talked about, which is available right now. That again, you can use that seller credit to pay for all your closing costs. You can use it to prepay HOA dues. You can use it to buy out the prepayment penalty on your loan. You can use it to buy down the interest rate on your loan. So there's the seller credit strategy.
Just to quickly stop you there, Chris, because we had a question about how seller credits actually work.
Oh, okay. So
I guess maybe I can try to explain it. Let's see if that works, right? A seller credit is basically a part of the negotiation that you would have when you put in an offer on a property. They'll say, hey, I'll pay you 2% below asking, but as part of that, I also want a 3% seller credit, so another 3% off the price that you can then use as part of your closing activity to pay other costs that are associated, whether, as you said, it's paying down any kind of interest rates or any points, whether it's paying HOA dues. It's really just part of a negotiation that you have when submitting an offer for the property. And that's all done the mechanics of it are executed at closing.
Exactly. So when that seller of that property is, getting the money, right? They're getting the proceeds from the sale of that transaction. It's going to be minus the credit that they gave you for the transaction, which is applied to your closing cost and other fees.